Well, coming back and following through with this theme, at the desk with me now I have Herman Warren, who works at The Economist. He is the Network Director for Africa at The Economist. Now, he's here to discuss what the Africa Business Outlook for 2015 is all about. Herman, thank you so much for joining us today. I understand that this report was released this morning.
That's
and you
right.
had business leaders, representatives from unions and other stakeholders there
right.
to participate in this. What does this reveal?
Okay, so I run the Economist corporate network, and we're an advisory and networking service of the Economist Group. And the Economist is known quite well, and for good reason, for our macroeconomic analysis and our sector analysis. And that's very useful when it comes to business leaders and others thinking about how they approach a market or a particular sector. But what's also very important is to have a bottoms-up view of a market. Right, very important, sort of a grassroots view of the market. So we launched our first business outlook survey focused on Africa. The title is Africa is the Horizon, and that was done for very good reason. If we look at the world economy at the moment, notwithstanding some of the issues that your previous commentator addressed, the fastest growing economic zone in the world is in Africa, right? And in particular, sub-Saharan Africa. It's coming off of a low base, but you can't ignore the growth rates. So what we wanted to do was to give a view on how executives actually operating on the continent are viewing the prospects going forward. So how have they performed historically, and what are their expectations going forward in terms of revenues, in terms of margins, in terms of the key markets where they're saying we want to grow in this market. We see exciting opportunities. So we spoke to 200 executives around the continent. They represented well over 25 industries. But in terms of geographic location, where these executives were based, we focused in the key economic hubs of the continent. So a core part of the pool, if you will, that we drew from of executives was in South Africa, Nigeria, Angola, and Kenya. Those are the four largest sub-Saharan African markets. They represent nearly 3/4 of sub-Saharan African GDP. And as I highlighted, we asked them about their margins, about their revenue growth, where they're investing and why, what sort of operational challenges are they facing, and how significant are those challenges.
I want to get your perspective on the historical performance and the situation now.
Sure.
Three of those nations that you mentioned, South Africa, we obviously the laggards when it comes to economic growth in sub-Saharan Africa. Angola and Nigeria rely very heavily on their oil reserves to get some kind of income for that. Kenya is the only one which seems to be sitting pretty at the moment. Have the executives, in particular in the oil nations and in South Africa, raised their concerns about the over-reliance that we have on national resources and natural resources and the fluctuations in the commodity price?
That level of granularity which directly related to the oil price didn't necessarily come through, but the irony of it is some of the most enthusiastic responses saying, this is what I expect my margins to be, this is what I expect my sales growth to be, this is where I'm very keen to invest, was particularly in West Africa. And I think when we talk about oil, we need to sort of discern between the situation in Nigeria and in Angola. So the Angolan government is a significant player as a percentage of the GDP, and oil is a significant funder of the government.
Yes.
The Nigerian government is significantly funded by oil, but government is a very small percentage of the economy. So we found a lot of bullishness, for instance, from Lagos-based executives in terms of what they expected in margins, in sales growth. We asked them, what is your top market in 2014? What do you expect your top market to be in 2020? And there were two key themes that emerged. So the Lagos-based executive said, right now, 2014, Nigeria, or looking backwards, 2014, Nigeria is a really important market. I would say well over 70% said that's their top market. We said, okay, well, what's going to be your top market in 2020? Nearly 80 to 90% said Nigeria is going to be a top market. Whereas if you look, and Angola had a similar scenario, but when we look to Kenya and South Africa, on the Southern African side of things, we spoke to South African executives and Kenyan executives. Their local markets were incredibly important to them in 2014. Going forward, they saw their local markets still being important, but decreasing relatively speaking, and places like Nigeria becoming more important. Or in the Kenyan case, adjacent nations, so Tanzania, Uganda, and so on. So it's very, very interesting, but notwithstanding the Boko Haram situation in Nigeria, notwithstanding an Ebola outbreak, which it was contained in Nigeria, but overflowed into Nigeria, that whole West African hub, we're still seeing a lot of excitement around that West African bloc and in Nigeria particularly.
About the event this morning, I understand you had representatives like SATU's Patrick Craven, as well as the JSE's very own Nkululeko Nyembezi.
Yes, we did.
And where I'm going with this is we always hear about regionalization as well as Africa coming together and prospering together. Are we seeing that taking place, especially before the outlook for 2015 to 2020 from these executives?
Well, I think that there's a recognition that we could be doing more. So by way of example, as you pointed out, South Africa does not have the same sort of bright growth trajectory as a Nigeria, notwithstanding its problems, and some other nations, Kenya, as you highlighted. We're under 2%, they're sort of 5, 6, 7% growth in 2015. Now, many South African businesses in particular have recognized that their growth path is north of South Africa's borders. And we see the likes of whether it's a Tiger Brands or a Standard Bank. You can go across the list of companies that are looking to expand their footprints, to grow their revenues and grow their profit margins. And that's positive. Having said that, if you were to compare Africa to, say, an Asia or even a Europe and look at the intra-region or the inter-region trade, it's very low. So in Asia would be 53%. You know, Japan would be trading with China, China would be trading with Indonesia, et cetera, et cetera. Sure. In Africa, it's about 11%. So there is a lot of room for improvement, but there is recognition that in this part of the world where all of this growth is happening, we need to be a part of tapping into it, and there's a lot more that could be done. Now, in terms of the differences, you mentioned the chairman of the JSE, Nkululeko, as well as a representative from Labour in the form of Patrick Craven. I think there was broad consensus and agreement, but there were also some important points of divergence. And one of the comments that was made today, and it's not revolutionary, was we have to step out of our boxes. We can't think business as usual. So in our session, we started talking about what's the world economic situation look like. Then we clicked down into Africa, and the survey was part of it. And then we clicked even further down into South Africa and saying, is South Africa open for business? And one of the notable, I guess, comments that was made is, maybe it's not so much is South Africa open for business, is South Africa open-minded enough for business, so that we're not necessarily grooved into our particular ideological tracks that we can't, think out of that and create something bigger and better.